Friends and family, what it do, yours truly, Joe Chad, back in the Earth tank top. We're no longer selling this one, but it's all good. You can go on to everyreasontohelp.org and cop up an organic t-shirt. Let's get into today's Technical Tuesday video and why you should never overcomplicate the market. Alright guys, so today's video is not crypto focused. You may be like, yes, you may be like, no, but it is still focused on finance, as for this is Technical Tuesday. First thing we need to do is understand why the markets are complicated. So let's look at the 3 top reasons why we overcomplicate the market. The first thing is that people think all financial markets are only run by banks and wealthy people. This is an understandable thought, but it's completely open to everybody. The second thing is that people think that only these rich people in these banks are just hiring Princeton, Stanford, Harvard graduates to just make money and read the markets for them. But this is also not true. Third reason is that the markets are set up for everybody to lose. Although it might be set up for the majority to lose, the majority aren't educating themselves. The majority aren't looking from the right perspective. So of course the majority is going to be set up to lose. What you need to focus on is getting out of that majority. Now let's debunk all 3 of these. So banks and wealthy people do not run the financial market. Banks are simply just facilitators for us to enter the market. And of course, in cryptocurrency, banks are no longer facilitators. We, the holders, are facilitators. But all financial markets are made up of the banks, funds, the retail investors, and the big wig investors. So there's the super rich banks, the super rich people. Of course, they're gonna have a lot of weight in the movement of the market because they have all the money. And then there's us, the retail investors, that make up a smaller percent of the entire market. And of course, our $1,000 isn't gonna be anywhere comparable to somebody's $10 billion or something like that. So when you hear people saying people are manipulating the market, truly to manipulate something, you need to own over 70% of the coin. Nobody owns more than 70% of Bitcoin. In fact, people don't, I think Satoshi maybe owns 4% of Bitcoin if he is a real person and if he has it or whatever, but we won't get into that. But simply, banks are just facilitators. Let's look at this analogy of a boat and price action, okay? So the boat is sailing across the Atlantic Ocean. All of us retail traders are only focused on the weight. We're only focused on the price reaction to what is going on. If it goes up, if it goes down, whatever it may be. But we never ask the question, who is driving the boat? As retail investors, as traders, as anything like that, we're always playing a guessing game. Instead, we can just shift our perspective and just look at who's driving the boat. We can see which way the markets are gonna go based off of the people with the most money and where they are putting their money. I look at Bitcoin as a technology, as an innovation, and this is also how I trade Bitcoin, okay? I don't trade it like it's a price thing that's going up and down and it's a casino betting buys and sells. I trade it as a technology, a curve of adoption, okay? There's gonna be news that makes it go through the roof, okay? There's gonna be halvings, there's gonna be all these things in the market that play huge factors, okay? And all of it's readable. If you guys know anything about Fibonacci, you guys know that all of these moves are measurable because it's measurable moves of human emotion. We need to look at the market in a much simpler light, okay? We don't need to overcomplicate things. We don't need to look at crazy indicators or crazy trends or crazy people on the internet. All we need to do is focus on who's driving the boat. Although nobody controls the financial market, there are certainly people that have influence on it, and there are certainly people that are going to shift the tide of the market. Remember, it is always buy the fear and sell the greed, okay? When Bitcoin is going to $200,000, don't buy any more Bitcoin, please. But when Bitcoin right now is at 29,000 after it's been at 65,000, consider buying a little bit. You're right, it potentially could go down to 25K, to 20K, to 17K, something along those lines, but we're at over 50% off right now. It's not a bad sale, knowing that this is a technology, okay? This is not it's not a business, it's not anything, it's a technology, okay? So we need to look at it of a curve of adoption. 5% of people in America use Bitcoin right now. Imagine what the price of Bitcoin would be if 100% of the entire country used it. It'd be insane. It'd be $5 million a coin. But I won't get into that. Think about it. Back in 2009, it probably had 1/1,000,000th of the popularity. And guess what? It was literally like 9 cents a coin. So I'm just saying, look at it from a different perspective, a more open-minded perspective. All in all, never listen to any YouTubers, gurus, anybody trying to tell you anything on the internet, because the only thing that you can trust is your own gut and your own intuition. So you might as well use what the banks are doing, use what the rich people are doing, go on the internet and see where Jeff Bezos is putting his money, see where Michael Sayer is putting his money. He's never selling Bitcoin, he's only ever stacking Bitcoin. Look at what all of these huge players are doing in the financial market and just simply follow them. Don't follow the dude that's lost thousands and telling you that he's going to make it big and pick the next coin. Just invest in what you believe in and never overcomplicate it. Peace out, guys.